Welcome to XM.com for this Forex Preview video. I'm Cristina Marujos. Joining me today is Cristina Bartenido, investment analyst, and we'll be having a closer look at the all-important NFP report. We surprisingly heard the Fed chief clearly saying that the central bank will ramp up discussions for faster bond tapering yesterday, and more importantly, Cristina, that inflation is now viewed as something more than transitory. So how important will Friday's employment report be for markets after the directional policy signals from Powell, and could a solid report increase chances of Fed rate hikes at the Fed December meeting?
Hi, Christina. Well, I think that Friday's U.S. job data could be critical for the Fed and, of course, for the U.S. dollar. As you have well mentioned, Powell surprised market during his testimony before the Senate Banking Committee late on Tuesday by admitting that the central bank will consider high inflation pressures more seriously, and perhaps the transitory narrative may drop out of the policy statement this month, also clearly stating that bond purchases will fall at a faster pace than the 15 billion monthly cut initially proposed, and that has consequently raised the odds for the tapering phase to end before mid of 2022, and therefore has strengthened the case for rate hikes coming earlier than previously anticipated. However, the current pandemic conditions are not the ideal ones for the Fed to move into action. The global health sector is now dealing with the new Omicron variant, and if infections worsen despite the high rate of vaccinations, then that could bring some headwinds to global growth if lockdown restrictions also resume in the US and elsewhere. So, as Powell wisely mentioned, the central bank will monitor the COVID conditions and closely examine the upcoming employment and inflation data before providing a more confident policy direction. And that definitely makes this week's US jobs data important to watch. What would be particularly interesting to see is whether inflation will become a bigger priority for the Fed in the coming months, and if that will consequently make the Fed accept a softer increase in jobs growth to move forward with its tightening plans instead of strictly waiting for the US labor market to reach full employment conditions. Currently, forecasts suggest that the US economy has created 550,000 new jobs in November, pushing the unemployment rate lower to 4.5%, which is not much stronger than the previous release, but is still an extension of the recovery in the US labor market registered in the previous release. So an extension will perhaps be considered a positive sign that the pace of monetary tightening will pick up, especially if wage growth also accelerates as investors anticipate, increasing the case for persisting inflation pressure. So if that's the case, then yes, the odds for rate hikes will probably strengthen.
But what was more surprising is that the dollar could not significantly capitalize after Powell's bullish comments. Could non-farm payrolls trigger the next bullish move in the dollar?
That's right. The dollar didn't show any important positive reaction, letting the euro to extend its rebound. And honestly, there's no clear immediate explanation to that. Perhaps end-month flows have balanced any buying actions in the dollar, but with Powell cautioning that any decision will still be data-dependent, traders could be more sensitive to this week's non-farm payrolls. So probably another upbeat jobs report may boost the dollar higher, likely keeping euro-dollar within the 1.13 area. Otherwise, a miss in expectations could question Powell's hawkish stance, suggesting a more neutral policy meeting this month, especially if effects from the Omicron variant worsen in 2 weeks from now. In this case, I expect the euro to continue higher.
Cristina, it was great having you with me today. Non-farm payrolls out of the United States are out on Friday. Thank you for watching this Forex Preview here at XM.com.